All right, quick review. I mean, I did my review already on paper, and I watched the tape and everything, but I haven't recorded a video. So yesterday, I saw from your video that you were trading here before the open, and I guess there was, I don't see much here, but at least there was edge here because this was an uptrend. This was a front side because it basically breaking away from that 900 area and then going trading into the 26,000. If you are trading this chop around here, again, I don't know exactly when you were trading, but dude, I would advise you not to do it. Maybe you were trading gold, I can't remember, but because you're just taking every every little very low time frame um, structure around VPOC and thinking that there's edge there, and there's no edge if there's no if there's not backed, if you don't, if you zoom out and you see in context, if it's in play, I think you may have been playing in gold. This makes more sense if you're because we have this structure here. If you're, fading the tops and then buying the bottoms here, waiting for a breakout. That's just my opinion. Now in gold, sorry, and equities. Let's go back to the 5 second really quick. I have to hurry up. I have to go do stuff before coming back. So, um, quickly a review of my performance. I made it. I was not in tune with the tape, and that's the takeaway from yesterday. So, 9:30 it opened here, and I had identified levels here in the 980s and up here. I guess in the up. I was looking at the top of the range here in the 940s, and what happens ends up happening here is that right before the open, it's like inching against the 980s. I try an entry before the open, which sometimes work if it's going to hold that level, and it didn't, so I got stopped out for just a bit, no problem. And then it's trading down, and then um, the dynamic range on the tape, which is I don't know if I've ever mentioned this, but this is how I view it. Dynamic range means dynamics on the take mean I'm a musician, so in music, dynamics mean soft, loud. In this case, it's a visual thing, and so I apply that to the tape and the speed of the tape, so slow and fast. So a dynamic range means that there's a clear difference between fast and slow, and we can see acceleration, deceleration, and changes in velocity and stuff. So that's sometimes it's not as clear, so it's foggy, and so there's not a clear range because the tape is too steady, either very fast or very slow. So that makes it harder to trade. But in this case, we had a very good dynamic range, and still I was sort of like not in tune with the tape, and I kept sort of like trading off of these arbitrary levels that I had in my head, which was like 980. So, for example, so 980 ended up not being not that much, breaks below 980, and it wasn't really an important level. This was an important level when it flushes here into the 960s, and that you can see the volume candle here. There was a clear. Well, I guess that's a volume candle from the whole open, right? It happened really quick, but anyways, yeah, 15. I don't know. On this candle here, when we get the flush into the 60s, that's where we get like a what I call range expansion or acceleration of the tape, and that was an easy trade, and I missed it. And I missed it because I had been trying to catch the bottom on the way down. So that was a problem, and I was already when I was down here, I was already like $500 down. Um, Breaks below, so that's the clear bottom of the range because that's where we got the first sort of exhaustion or range expansion of the 960s and then a good bounce into the 70s, almost hit 80s. And then it would have been an easy short off of that 80s area. And I was sort of hesitating, so I didn't take that trade. But when it breaks here below the 960s and we get real momentum, this was real momentum. This was flush into the 60s and then the 50s. What am I doing here? Am I even? No. So I'm sorry. This was the exhaustion into the 60s. We see it come out. The low is actually 55, but there were barely any prints there. This was the sort of the real range expansion that I should have waited for, and there was a really good trade, and there was a bounce up into this area, and then here it blows off the top, as it has been doing recently. So 980s and the whole 980s, and then but it never really, we had this trend line here. Actually drew that trend line out after the fact. Um, we get another double bottom here into the 960s that was very tradable as well. And then when we break below 960s, we get momentum. And I haven't seen momentum to the downside like this in a long time. We get real momentum. And I traded this very badly, but it was so clean and so good that I basically made most of my losses back, even though I traded really badly. But the way I should have traded this is like, once I know that we're breaking below the opening range, and I realize that we have momentum, and I do remember getting an entry here in the 60s. I could have held this thing all the way down into exhaustion in the 930s. The first real like exhaustion action that we saw on the tape, even though it doesn't look like it here, was here into the 930s, and that's where I would have taken it off. So okay, we got that. Then we got the move upwards. Here it does exhaust into the 980s, so that level does come into play now. Um, Reject. I'm a little bit upset because I didn't take that trade there. But then we have a nice trend line here. It goes back up. It looks like it's trapping. And this was a key moment where, if you zoom out, we already had a clear super A plus setup where we have a wedge breakout pattern that failed, and we get a real failure like a flush, but then it's, that flush is saved, backed up, soaked up, and then, it's retracing back into this area, and basically that 980s now becomes the level to reclaim. And I mean, if you were watching the tape, we come back here at exhaust. Look at this volume candle here. Here now volume candles, once the tape is not as crazy as right at the open, after 45 minutes here, the volume candles start being a lot more important, and they show like the real. So we get that exhaustion here into 980s and rejection, and that was expected. That was the top here. Um, Comes back, traps, and this first um, push, taking out the highs into the mid 80s, and we get another, volume candle here, exhaustion. That was the perfect entry for, and then we get a little chop here that was basically trapping here, and you could see the momentum of the tape, but you knew that this was already, on. So I hesitated there, and I didn't take that trade, and I should have. Um, and then it pops into the mid 90s, and then we know already that it's going to test at 26,000, and it goes, 10 points above 26,000. So hesitating through this was really stupid, and I missed good opportunities there. We get a flush into the 90s, into the 80s basically, or low 90s, and I actually do get in, and then I pike out here in the low 26,000s instead of holding. And it was pretty clear that there was a lot of volume trapped, and this was just waiting to burst to the upside, especially because we have such a good technical setup here. And I missed a whole move. And this was really, really good. This is really good, all the way up into the 50s of squeeze. And this is one of those trades that just makes your whole day. And I missed that. But at least, I'm break even here. And then I did here catch. I took some paper cuts here. It was difficult, but I did basically catch the bottom here and traded this retracement up into the 50 VPOC. And then when I saw it trap on the tape, I didn't hesitate this time. Stall tape, reclaiming that VPOC and still no velocity, no print. So then I join trend there and it ends up popping here and trapping here. It doesn't reject and we see a lot of prints, but it doesn't come down. I know there's a lot of volume, so I stay in and then bam, it squeezes into this area. I take a little bit too fast in the 60s. It goes all the way up into the 70s. That was a perfect trade. And then that put me up pretty good. I was up like $350, something like that. And then I make the mistake of look at this volume candle here, like true exhaustion after this move. And this is why context comes in. So we're always talking about, oh, exhaustion, trap after exhaustion, and then up. Yeah, but when it's breaking out here, it's not really breaking out. We're already at the top. This was a flush. So I took this as maybe, okay, failure and then reclaim a VPOC. Well, that trade already happened. It was this one. I already took that trade. So why am I forcing for another trade further to the upside? This was a trade, the VPOC reclaim, and then we're topping out into this area that we know it's top because on the higher time frame, the 26.5 26,050 between 50 and 70. This is all a liquidity area. Same thing we were talking about the review yesterday. It's like this is risk area. It's a top area. It's like we shouldn't be looking for continuation here, at least not yet. So I got the trade. We got the trade here, the momentum trade. We captured it. Why am I trying to force for continuation? So I got chopped out again. I gave it all back, and I was lucky enough that then we got some chop here where I could scalp back up, and then I made most of it back, but not all of it. And then I just called it a day because I knew I wasn't trading well. And that was my trading day. In the end, well, looks like we got overnight, we got this huge move, and we filled that gap into, by the way, if we zoom out, um, this is basically this area here. We've been here before, and the VPOC here, I have it marked here with a what this was 50 and 7. This was where we were topping out yesterday, this white line, and then up here at the highs, and it's this piece of VPOC here. So about the 250s, 250 to 300. This is all top area, right? Looks like we filled that whole gap, and we're back there testing this area. Of course, and this is, I would just wrote this on the Discord, this is not an area to be looking for longs, obviously. This is a huge, I mean, from here where we were breaking out, we were just at 26,000. This is 350 points into the top, basically a huge double top, right? So even if it does break out, there's no edge in thinking that it's going to break out. This is basically a um, a double top, right? So a really like higher time frame double top here. So it would be kind of stupid to be looking for longs here. You never know what's going to happen, but the bias is definitely to the downside, even if we get like perfect wedge consolidation patterns like this. Like this is looks pretty, it looks pretty textbook to what we've been doing lately. Chop, failure, comes back, reclaiming VWAP, we have VWAP in an uptrend, all that good stuff. But well, we zoom out and we know that this is an area where this, no matter how good and clean and good quality the technical pattern is, we the context tells us that this is most likely going to be a fail breakout, and we might not even get a push here into the high of this wedge. And if we do, I, I would not even be touching this to the upside. I'd be waiting for this to break down and then look for trades to the upside, downside, unless we get a catalyst you know, like if we do get a rate cut and there's like 90% chances that we don't. So then if we do get it, then obviously this thing flies, but only in that event. All right, that's my review for today.